SoFi stock has more than doubled so far in 2023. And a lot of investors are probably wondering, did I miss my chance to buy SoFi stock? I'm Jason Hall. This is The Smattering. And we're going to answer that question right here. I'm going to say it up front. I don't think that you did. And it might not be for the reason a lot of people are talking about. Before we get into the reason, it's not really a secret. It's just hard for a lot of regular investors to find if you don't know where to look for the information. I'm going to talk about the underappreciated reason why I think SoFi is still definitely a stock worth buying right now. But I want to thank our sponsor, The Motley Fool. If you're looking for even more great stock ideas, go to our special link. You see it right on the screen above my head, fool.com/The Smattering. You get 10 great stocks to buy right now from The Fool. Okay, let's talk about what SoFi is. So it's a fintech, but it's also a bank trying to make a big presence with individuals for banking and for finance relationships. I'm going to share something on the screen here. This is a look at their member growth. Individuals that have at least one relationship with SoFi, whether it's a student loan that they've refinanced, a bank account, a trading account, one of the other financial services products that they have. And you can see this number has grown at an incredible rate, not just year over year. Again, 46% growth year over year in the first quarter, but sequential. Every single quarter, this number continues to grow. If you take a look at products, again, so this is members, people that have at least one product. This is the total number of products, 46% growth last quarter. And that's essentially the same growth rate as members. So they continue to grow at a really, really high rate. But we all know that. We know SoFi is growing really, really fast. I think people also know that the student loan moratorium for federal student loans, it's coming to an end. And people with those federal student loans are going to have to start making payments again. That's a really big catalyst for SoFi. We've talked about it before on this channel. It's a massive market. Even with interest rates much higher, SoFi has some tools in its toolbox to help people lower those payments. And that's going to be a really big growth opportunity. But that's not the big thing. I've got one more thing that I want to share here. I think that's even more important for SoFi. As much as student loans refinancing is going to be an important catalyst for SoFi, and it is a big part of its business, and it's going to continue to be a big part of its business, SoFi has been diversifying its business over the past couple of years. We know it acquired a bank, so now it's the bank of record. So it's not having to pay a bank a cut to be the banking partner in the background. So that's a big benefit that it's gained. But it's also diversified. They've started doing mortgages. They've backed that down a little bit as interest rates have gone up because there's just not as many people getting mortgages right now. There's not as many refinances that are happening because interest rates are so much higher than they've been over the past 15 years. But they're starting to build out that business. Auto lending, personal loans, credit cards, like all of the things that banks do. They're starting to do more of those kind of banky things. And this is the thing that I wanted to share that really highlights why I think this is a great time for SoFi. One of the great things about bank regulations is that the FDIC has a website where you can go in and you can see the information that banks are reporting to the FDIC or to their regulator that then rolls up to the FDIC. And I want to highlight a couple of things specifically under performance ratios. Now, again, this is at the bank level. So SoFi Technologies is the holding company, and then SoFi Bank is underneath it, right? But this is really important because this is a look at the economics that they're getting at the bank level. First of all, yield on earning assets, 9.74%. That is absolutely wonderful. Cost of funding, 2.99%. So we know one of the ways that SoFi has attracted so much growth for their banking business is by offering high yield savings, those high yield bank accounts. Now, they're still getting a really good net interest margin, 6.75%. That's like double what a lot of big profitable banks are getting. So even with that high cost of funding, that high cost of capital there, they're still, because of those high interest rates that they get on a lot of their lending products, they're getting really good net interest margin. Now, why does that matter? You might be wondering. Because the interest rate environment has changed. And this is not a bank, SoFi, with a bunch of legacy mortgages at 3% or less, like so many of the larger traditional banks have on their books. So SoFi is not weighed down by those low yielding loans that a lot of banks are, and it's able to offer high yield savings and attract those deposits and use that cash to fund future loans. That is a major competitive advantage because it doesn't have that legacy sitting on its books that I think a lot of people are underappreciating. So looking forward, I think that SoFi is one of the banks that's in the very best position to seize this opportunity for growth in this higher interest rate environment. And it's been a big winner in the past 6 months. I think its best days are yet to come.